Good morning. Welcome. Nice to see you here. This is R.N. Bhaskar from BKBB, which is an acronym for Bhaskar Ki Business Baatein. This is a channel that comes to you every week with policy analysis, an occasional conversation, and an occasional business story. But right now, at 8:15 in the morning on weekdays, we come to you with news behind the news. We pick up a few headlines that we think are immensely relevant. And that is the story that we'd like to analyze and make it the news behind the news. And my co-anchors today are Katya. Welcome, Katya.
Sure.
Muskan. Welcome, Muskan. And Janvi. Janvi, welcome. The three of them are going to discuss three different titles, and the titles can be seen on your screen. The first one is how the Ant Group of China plans to sell the Paytm stake. And the second one is why the US-EU pact, trade pact, does not suit India. And the third one is, can UK-India FTA provide an escape route from the tariffs that Trump hopes to levy on India? Very interesting developments for India and for global trade. Let's take the first story. Katya, can we have you?
Paytm has a much of international investors it always had. So now Ant Group has already been selling stake over via block deals ever since the bull run started the last 2.5 years. But now there is a report which has come out by Reuters which says that they plan to exit it. So it, in spite of all the many exits that have happened in the last 2 years, it still has residual 5.8% stake. So and this year and last year it has been on a stake selling spree. It sold 4% in May and 10.3% in 2023 when the whole bull run was in full swing. So, and Antfin was one of its oldest investors. It came in 2015. So I'm sure it has made a great return on equity. So, and it is not just Antfin which has been selling a lot of foreign investors, obviously, because it's been 10 years, 11 years. It's normal for them to exit an investment. We can't stay for longer. Berkshire Hathaway is exited. SoftBank was also exited. So it is also a normal process for pre-investors. In fact, it has stayed longer than most others do. But what is interesting is, very few people see a large growth pathway for Paytm after it lost its payment bank license, and then UPI charges are also being mulled. Also in general, the fintech pond has been fished out. There's only that much growth path it might have hit a ceiling, is what I think. Do you agree, sir, or do you have another view? Do you think there is a bigger growth path for fintechs and startups in general?
There could be a greater path for fintech if the RBI and the government of India avoids the risk of changing rules constantly.
Right.
The fintech has been plagued by constant policy changes. And one of the things that happened was even China, which was one of the biggest players in the startup field, including the fintech sector,
Right.
the government banned it. And so again, you lost a major champion for new funds coming in and new startups coming up. So because of that, people who come into the fintech sector are either very big players who can withstand the shocks of policy changes, or else they are players who look for the short term and not the long term. Sad, but that's the way it is. And let's take the next story, which is equally interesting, and that's from Muskan. Muskan, could we have you?
The highly anticipated US-EU trade agreement appears to be moving forward, but not without significant debate and a surprising turn of events. The proposed US-EU trade pact has been described as a template, and it's now a topic of fierce discussion. According to a recent report, the agreement has been met with a critical reception from politicians in both the EU and countries like France, who fear it could undermine the economies. A key element of this pact is the lopsided trade agreement. In a surprising twist, the EU, which typically enjoys a trade surplus with the US, has agreed to eliminate a 27 billion euro block on its exports to the US. In return, the US would lower tariffs on EU exports. This move is seen as a way to build a rapport, but some are concerned it gives US a significant advantage. Meanwhile, India, a non-signatory, is also paying close attention. There are growing concerns within Indian government sections that signing on to such a lopsided trade agreement could have serious consequences. New Delhi has already expressed a sense of unease, noting that the draft agreement's tariff lines, the specific duty applied to goods, are still a work in progress. Finally, the report also highlights the potential challenges to the implementation of the pact. Legal challenges are also being raised, questioning whether the trade agreement is legally binding and if it could violate existing international trade rules. The coming months will be critical as this template for a new era of trade faces intense scrutiny. Its outcome will not only shape the relationship between US and EU, but could also set a new precedent for global commerce. So, what do you think about the agreement, sir?
As you rightly said, Muskan, uh, the EU-US trade pact is a very lopsided one. The US pays lower tariffs or zero tariffs, while EU has been compelled to pay 15% tariff. Germany is furious because that affects its entire economy, and so is France. Whether the trade pact survives or does not survive, India believes that this was protecting the US interests more than EU's interests, and India wants to protect India's interests. That template does not suit India. And the US thought it could twist the EU's arms and make this a global pact. But as we have seen in the world, China refuses to toe the US line. It has yesterday said very categorically it will continue importing oil from Russia and Iran. Canada, Mexico, Brazil similarly have not taken up warmly to any of the US suggestions, which is why the US now wants another success rate with India and is twisting India's arms. India has so far resisted. But yes, the EU pact does not suit India. Thank you. Thank you, Muskan. And let's take the third story, and that's Janvi.
Yes, so sorry. So the elephant in the room is, of course, USA's imposition of the 25% tariffs on Indian exports. But India does have other prominent prospects in global trade as of now, which including the FTA that we signed with the UK last month. And in the light of all the tensions with the US, this deal seems to be a strategic one. This FTA eliminates 99% of the tariffs on Indian exports to the UK, primarily including textiles and agrochemicals, electric vehicles, and processed foods. And why does this matter? Because these are exactly the sectors that Trump's tariffs hit the most. Your pharmaceuticals and textiles, jewelry, electronics, sectors where India's MSMEs are sort of staring at cost spikes and possible job cuts. But the UK deal gives them tariff free access, which means job stability in labor intensive markets. India is currently also negotiating deals with the European Union and Peru, while with Chile, it is planning to expand a preferential trade agreement that they signed back in 2006. The USA's share in India's overall exports is mostly around 16 to 17%, out of which as much as 10% could be potentially shifted to the Latin American nations as well as to the European Union to avoid steeper tariffs imposed by Trump's administration. So while the tariffs will have an impact right now, it probably does not have to be seen as a long term problem because India is diversifying its trade and it is moving away from an over dependence on the United States. So, what's your take on this, sir?
Thank you, Janvi. Very interesting development. In fact, the UK trade could be very interesting in more than one way. It won't be long before savvy traders decide to use the UK-FTA trade route as a window for exporting to the US without any tariffs. So traders in the UK will import more goods than they need and then re-export them to the US. Let's see whether that happens. There's a second thing which is happening. India wants to pursue trade with Peru, with Latin America, with EU. It's not looking at its own neighborhood. And globally, the best economies are those which trade with the neighbors. India's ignored Malaysia, Indonesia, the ASEAN, which are highly populous. Other countries don't have the populations that these people have, or Africa has. And India should be looking at those areas even far more closely to de-risk itself from the West, including the EU, including the US. Let's see whether India does it. And that, in a way, takes me to the end of today's sessions. Thanks, my co-anchors. Excellent stories, excellent analysis. And before I go on to questions and comments that have started coming in, just the usual reminder. Please click the subscribe button if you're not a subscriber already. And yes, click the like button. It helps the algorithms with YouTube. But most important of all, please tell all your friends about us. We want to grow faster. We are growing, but we want to grow faster. And that in turn takes me to the next issue, and that is comments that have started coming in. Do you think the tax authorities linking digital pay for tax violations can slow down payments growth? The entire digital policy is still unclear. Please remember the vendor who now accepts payment through Google Pay or through Paytm or whatever way. Till today, the vendor has remained free from tax, but there's a digital trail that is there. Give it a couple of years and every trader, every vendor on the street will be answerable to the tax authorities. And that is the time when the digital payments may become a little sticky for most vendors. There's a second issue. And the second issue is simply this, that till today, digital payments do not have to pay merchant discount charges that credit card companies have to pay. The government wants to find a way to monetize the UPI. And the second it puts a charge there, we'll have to see whether this scheme, this method of payment remains as popular as it has been till now. These are two question marks that are there. Let's see what happens. But yes, digital payments can get affected if the weather, if the environment changes. And that takes me to the second question, and that is a question on Chinese investments in the fintech sector. China was a large investor in the fintech sector and the startup sector. Is Ant leaving India because of this move by the government to constrain the Chinese investments in this sector? Katya, what do you think?
See, I personally, I wouldn't read too much into it because it's a 10-year-old investment. They had to exit at some time, the investment environment. And if you see, they've all started during the bull run. When the stock bull run when the stock market bull run had started, they had started exiting it. So I think it's organic as well. But what I think, I do not think there's too much of a runway for growth from here on. The kind of spectacular growth that they've seen, it's not going to be any like that anymore, because the loan growth, personal loans are being clamped down. There are many other issues are happening. Consumption market is also changing. So that is what I think. I think this kind of growth is good for stock market, and not VCs would and PEs would like a lot more growth. So that is probably the reason why they're exiting.
Thank you. And there's a third comment which has come in. Why are the trade deals with other countries not being pursued on a continuous process? This is something economists and analysts have been pointing out to the government for the last 10 years. Almost every country which is a major exporter, at least 20% of its trade comes from neighboring countries. India is looking at the US, which is miles away, or Peru. Why don't you look at your own neighborhood? Transportation lines are the shortest. There's a trade advantage, and consolidation with the neighborhood is always more effective in the long run than looking far away. But then India has to learn some things which it does not learn easily, and trade is one of them. Let's see how things change with Trump in the chair. And that brings me to the end of the questions. We've reached the end of our time limit. Thank you for being with us. And yes, have a wonderful day today. And look forward to seeing you once again tomorrow. Thank you. Good luck. Goodbye.